All right. From the summary of what people have given, let's start with, please take note of the following. It's very important. Number one, maybe there's going to be a need if you cannot open multiple windows because probably your trading view is not a premium or basic subscription. It's a free one. So there may be a need for you to have your trading view open on two browsers. Now, why am I saying that? Or if you can open multiple tab, it's important. So that there will be a place that you use purely for analysis. Purely for analysis. What do I mean by that? That is your top-down review. And then there will be a place just like how you are seeing this place now, purely for market review. Then you will now have another one that's going to be especially, we that are trading with gold and then maybe Bitcoin and all of that, so that for that psychological key level will not disturb you to look at the bigger perspective of the market. Very, very important. So you can have it, then you can easily go over to look at what to do and all of those things. That's number one. Then number two, there's a need for us to always look at the market from the higher time frame first, right? From the higher time frame altogether. We must look at it from the higher time frame first, right? To see the general perspective, especially to ascertain the trend. Where is the market going? So when you know where the market is going, it gives you an edge to know the one that should form more of your entry than the one that should not form your entry. Like when Mr. Nat was talking, because you saw a perfect power of 3 here. But before you could look this, it's still power of 3. It's just that form in a different dimension. This candle is what formed the power of 3. So this one, you saw it obviously because there was a massive push up. So you saw a full body candle and a pin, right? A pin bar on top of it. So it was obvious. So it's not all the time you will have similar like this. Look at this one. A full candle with not a pin, but a doji. Right. This one, a full candle with similar pin, but this is like more of a doji, but with more of a big candle. Yeah. So if you check when the market was here, your indicator perhaps may show them, but you would not know. This is the power of 3. A full body candle, that is accumulation, manipulation, and disperse. Now, when you enter here at the close of this candle, and then you put your stop loss here, when the market rally back, you'll be afraid. Don't need to. You have already assigned the money, so why bother? Now, while you were doing explanation, two things occur here. Why many of you do not observe. One, remember in my trading strategy, I always tell you that every swing low, swing high is a potential support and resistance. I know many of you have forgotten most time if a market get to a place, even with this now, you will see me that sometimes, like especially on 5 minutes, if I'm scalping, I always tell us that you see from the week, I don't need to mark it, but I'm aware from the week of that last candle to the body of that candle is a resistance or support depending on if it's down, like this one now, to this is a support altogether. So what I want the market to do that have gone down is to come to it, number one, rush into it, break it, and now go above it. That means the market will continue. Okay, to rush it and fake out, which is the sweep of liquidity, and that's exactly what happened. three, don't even unable to even meet up to that point. So they are all failed. So because of this, so this is called sweep of liquidity. You move up massively, somebody will be afraid. And now that's why I always tell you people, you cannot enter market until and if a candle is closed. So most time people enter trade, especially when the market like now, this candlestick, somebody is afraid, we quickly close it. Then the next one move massively again and return back up into this point. Now, so you must establish that fact to understand what you are doing part time, so that if not, I know many of us, when we're doing the analysis, I already see this cell. I don't want to interrupt it because the market has done, then this was part of three. So give and take, this will have formed the entry and the stop loss here. Of course, even from here to here, if you look at it, that's almost the middle of our 100 pips. So that means almost at the 50 pips range. So definitely here is too close. And considering this low here, so I will be targeting the middle low, the middle range. Don't always forget, especially when it has to do with gold, don't always forget your 50 to 100 pips. And sometime, instead of your 50 coming, maybe give you 60. How do I mean? Because if you look at it from here down, look at it from here now to, let's say the center will be 205. Let's look at it. That's already 80 pips. Do you understand? And then it aligns with this of sweeping of it. Now, that's one thing that we must take note. Okay, I'm trying to just pick up this. So I've said separate your analysis trading view from, you know, from your strategy, just like our psychological key level. So where you have your psychological key level, I can still do my analysis there, but sometimes you may not do it well because by the time you are going to a higher time frame, everything will be choked. You will see the chart. I always tell people pure analysis is done on a clean chart, and then you'll be able to interpret. Or sometimes if it's a place where it's not psychological level, let's say it's Euro USD, and you can just hide your indicators and then you'll be able to see it properly. Okay. So, but in the case of gold, you hide your indicator, you won't be able to hide your psychological key level, and it will clumps everywhere. You understand? Good. Now, next you need to do now, so which is very paramount. So, okay, I think it's a clean page. Okay, I've talked that. You need to see the overview in higher time frame. Okay, talk about that. Now, don't assume. I've told us you are entering market with three questions in your mind: where, why, and when. Where, context. That is, you're looking for the point of interest. And for me to ascertain the point of interest, I must do the top-down analysis on higher time frame. And then I'll be able to see places that I'm expecting the market to come to so that I can form my actions of entry. Then you are, okay, why? Oh, because it has come there, it's at so place, it's now this, okay, these are conferences now. Instead of one, it's even two or three. For instance, somebody mentioned about other block, Mr. Cole, talk about that block and fair value gap. Yeah, so there may be two or three of such conferences jump together. You give you what we call A plus setup, and then you say, this is very fantastic. But even with the A plus setup, you still need to be sure what you are doing. That has to do with precision, where we are now looking at. Inside that place, market have come there, form, part of three, form, maybe going to a lower time frame to see, especially in currencies. to go to lower time frame to see what do we call it? Change market structure shift. So let me run. Sometime in gold, there's one lovely thing about gold that can even save you. You look at it, the analysis of yesterday still stand on gold. I don't need to do a fresh analysis. The analysis of yesterday on gold still stand. The only thing is that now, just like when we try to pick the pivot point, which was good, we try to see what was yesterday high and low. Now, so yesterday high was here, you have marked it, and then low was here. The good side of it is that yesterday the market actually came and mitigated the 4 hours order block, which was this, right? And then even the 1 day daily order block. This is daily. The market tap into it. Many wouldn't see it. Let me just let me take this one out. So on daily time frame, there's something I posted about what to look out for, right, on each of those period. Now, daily time frame, I quickly want to just come to see what was previous high and low. You see this previous high and low, they are liquidity. In fact, the way gold is now, if care is not taken, watch out, maybe by 6 a.m., we may have a slump down to sweep this low of yesterday. It's not a guarantee. We waited for similar thing on Asia session one of the day, and gold, it's a naughty boy. But on daily time frame, the liquidity, the external liquidity that is close to be swept for gold is the bottom. That means to come below 4193. So probably sweep to 4182, stuff like that. Now, that's one of the possibility, external liquidity. Now, but the good side of the whole thing is that, remember, the last break of structure that happened here since yesterday, and we have returned to mitigate the order block, that is the daily time frame order block. This becomes a support, however, right? And we have to go up. So if we have to go up because we have an impending high, is it a must that impending high will be taken out? No. But you are looking at the higher probability that it can be taken out. But this is the point. You must be able to mark clearly on that higher time frame. So you don't stay there unnecessarily. I want to see the previous day high and low is established. Then other relevant pivot points. So if I like, I can mark this, even this high, this last high. Then you have been able to see where the market was coming from. So internally speaking and externally speaking, the market is bullish, meaning if you go to weekly and all of that, monthly is bullish. Now, on daily, this was a massive pullback, right? But it has already corrected because here become a demand zone, all of these places. So it has already corrected to continue going up. So that means you have an assignment to go and take out this. By the time you take out this, all this journey you are having, their internal structure, this become another low. That's one you need to understand. All the whole thing we are doing become, let me take out this switch. All the whole thing we are doing become an internal structure because, because this is a high and this is a low. So everything now, by the time the market break this, all these things that we're doing here, they are now internal high and low. So, but now you are on internal high and low, you have to recognize it, which was this is a low, this is a high, this is a low, this is a high, this is a low, okay? So this low now had broken this tentatively. I would say we already have a low tentatively. So that means we expect the market to continue break this because we have an assignment here. What if it refused? So you have established on daily time frame to see that the market is what it is, and it need to push up. But this is good. It has good volume. For the fact that we are anticipating the market to continue pushing up, am I now going to just say, let me buy and wait? No, now. There's so much volume in. That's when you step down to 4 hours. Now, when you step down to 4 hours, you now have a newly defined outlook. Now, the newly defined outlook we had is still similar to the daily time frame. And how? You have a low here, and you have a high here. Then you have a low. So this low is higher than this. That's your structure. You don't need to even waste too much time there, because you are more going to be working with more recent break of structure. So you have another low here, and then all of those ones are played out. So you can't take anything there, but you already understood the whole scenario. And you now say, okay, this is still a break of structure on 4 hours. The structure has been broken. That means this impending high, all right, this impending high needed to be taken out. That means we have two impending high, the more far external impending high and this internal impending high. So look at this high now. So this is break of structure, right? Now the market has gone up. So on 4 hours too, we have it here, which was mitigated. I just remove it here. Look at it here. So has been mitigated. That means even if gold will come down, it's not a bad one. Let me tell you why. Remember, I said this is a low of yesterday. So if markets drift down and sweep yesterday low, it's not a bad idea. All right. So, but you can now see that this, what I was mitigated, will form a support. What if you cannot form a support? Maybe this one. But remember, on that same 4 hours, there is this unmitigated other block that is like a debris down here. So most time people would not understand. If all the conditions you are looking at could not hold and it splits all of this one, you should have an idea. Oh, gold did not hold all of this place, just having a free fall. You don't need to panic like the others will panic. Like the way people panic on Bitcoin. You can see if anybody tell people that Bitcoin was going to go back to 94,000 yesterday, even though I still short and make money and then long again. So who will believe when it was crashing down? A lot of people start making all manner of funny suggestion. Bitcoin finally is going to do like this. Yes, tentatively I've said November was the top of the roof. But imagine what you can still make while the market. But some would now, no, I can't buy Bitcoin now, or I can't long Bitcoin. Inside the bearish, we saw what I long. It's because you are looking at context, not the noise or general talking. So if gold is going to crash here now, it can crash down here to come and mitigate this other block. That means Bitcoin, gold can still crash to about 4,069, 4,000, 078, stuff like that. And so when it crash here now, that means you are looking for a buy. But upon all, if it crashes down here, it's not still a bad one. That means all of this one now become internal liquidity for the whole internal liquidity and structure for the whole journey here. And which is not a bad deal. That means this is a structure, a low, and all of these are external structure. So for it to crash here, it's not a bad deal. You can see that. But so am I going to fold my hand and be watching that crash that is going to do? No, that's not the question. That's why you now still go to a lower time frame. And when you have finished this analysis, there's a consciousness that show you something here. Now, that consciousness of your questions. Where? So when the market gets here, I didn't remove this one. When the market get here, I know what is happening. Yours truly. You see now that it's actually crashing. Now, I know what is happening when the market get down to this point. I know what is happening, and then I'm going to do the needful. The way it's doing now, are we going to now have the crash continue? No, it's not a guarantee. Now, if you look at it now, it has come below yesterday low. And I told you that was the closer liquidity. The closer liquidity is yesterday low. and it's external liquidity. But is it the sweeping that's going to happen? Then I need to know, I need to see how it actually swept that and return back up, right? And return back up to where I want it to return back to. Do you understand? So with that, then this one will form a support. Even this one too will form a support. Or this is another liquidity because that was the previous day low or something, if I'm not mistaken. That the market can still come there. All of these are where. Remember, I talked about liquidity and all of that. Now the sweep is happening. You want to see that the market need to return back to the range. If you return back to the range, that means it's a total sweep. You are now looking for another thing entirely. So this must form in your mind so that there are some trades that will trigger you to enter. You won't just enter anyhow because you understand the structure. Now, if you go to 1 hour, there is another language that is going to speak to you. But if you look at 1 hour, what has happened was this. We still know that this is an internal structure. But in the 1 hour, what has happened? The 1 hour too was drifting up. This was a break of structure. This was a break of structure. But I told us yesterday the same setup was what happened yesterday. This was a sweep of liquidity. And that's what we call displacement. The market has come up here as a break of structure. You return back and then go back again. This is a displacement. Now, after the market displaced, all right, we still have this low. Then it form another thing here, return back here. Then we now have a break here. So on 1 hour, inside the same matter, okay, so we have a break of structure here because this is the one that induced this is the low that induced this high. So it has now broken. Now in breaking this now, that's like a shift. You are working with whichever is the last opposing. So working with the last opposing, that's the importance, okay? That's the importance of our, so if you look at it, if you stretch down here, you'll see what happened here. Okay, sorry, let's go this way. Okay, so this market now has broken its structure, and then what we had was that broke a structure, and at the same time here, now change of character, sorry, internally, and we have this, okay, and we have entirely this, so total shift and break. So you have the market. So if this is total shift, it didn't return back. Now this break, because you see it push back, couldn't get to this your other block. So what now happened? Very simple. It break, and then you have this. Are you getting now? Internally, inside the structure. Now, so the market break the structure. You waited here. You already know your origin. The market return back here. By that time, you are going to lower time frame, right? And the market delivers for you and broke another structure. So in this structure, it now break, I think was when it now travel inside that 4 hours order block. Remember? Travel inside the 4 hours order block, if I'm not mistaken, because this was a daily one. So it traveled into the 4 hours order block, tap into the daily order block. So now you have seen the break of structure, and you still have here, remember this was another block. This is another order block that brought about this mitigation. You see now? Now, so what brought about this mitigation was this other block. So it tapped into this point. By the time you go to lower time frame, you see why we're entering, taking market and all of that. Market tap into it, yours truly. And rally up. Rally up, you are seeing this point. Now, rally up here. now travel here, did all manner of abracadabra. So you can see the market kept struggling within this range. But ultimately, you are still looking for the market to come and break this and continue journey again before we have a final bus stop. And if you are going to crash, you crash. Now, this is 1 hour typically. A lot of people will not be able to do that because they are not sitting down. They have too many things to contend with, and these can distract a lot. So here was that the market now had broken this, and then it changed narrative. And then come back again here, break this, and we have a retracement. So if we have a retracement, that means this one is now a low, and then this now have another low. Now, markets break out of this. So you are now saying, oh, this is a break of structure again, back up. That's where you see, by the time you put your indicator, you will see change of character. You will be confused. Don't need to be confused. So that means this one now, look at this, is now new bullish order block. Market has been struggling in between these. Remember, I told you that market here is the liquidity, external liquidity that the gold was closer to here was which one? Was this yesterday low? The reason for marking all of those pivot points. Now, invariably, this market by 6 a.m. or before the 6 a.m., because it may be sluggish. Remember, I told you guys timing. So what you will have gotten this morning was a good, perfect sell. And now the market is now returning back to the zone. Can you see? The candle has not closed, so you don't conclude. So you can see that it has swept this liquidity gently while we're talking. Now, if you go to 30 minutes, you are going to have almost repeated action because 1 hour, 30 minutes, they are similar to whatever. So now I don't need to over disturb myself. Now, you see all this inside one that you did. By the time you now go to your psychological level, oh my God, that's when you'll be picking that 1 minute, 3 minutes, 5 minutes with ease. So even when the market is doing, you won't be afraid because you already know, oh God, take it easy. I know that you want to go and sweep the previous low. So instead of closing your trade, you say, forget it. We'll only wait to see for another buy. So final bus stop I will get to is that 15 minutes. Now, if I go back again, you can see all of those buy, sell yesterday, or even on Monday that we gave, is still similar to this. Here we have this high, and then we have this low. This is internal structure. It break, this is a break of structure. And after breaking the structure, it retraces. And now again, this is displacement. He has created a low, a high before. He returned back to it and displaced. So with this displacement, by the time you go to our indicator, you see that our indicator already says sell here because this is break of structure, a displacement. It's telling you to sell here that this is a manipulation. And when that market happened, many do not see it. Manipulated and the sell was good. So if the sell, ultimately, you probably will be targeting this point. Now, the point is this. You have sold. You don't even need, by the time you go back to your, call this thing for us, man, go back to your psychological level. Before getting here, you have taken profit. 10, 50, 100 pips. Yours truly. You don't disturb yourself. So the market now becomes so choppy. For the fact that it's choppy, these are total inducement. And now what happened? The market's choppy and broke structure. Look at this, the break of structure. Remember? Now, so that gave you to another, in that your 15 minutes. What do you have here? Your other block. Yours truly, right? And then after that break of structure, what happened? The market come to it. Tap into it. Definitely you are selling from here. Definitely you are selling because you see your power of three very clear. And now you sold from here, your stop loss, of course, above this point. Now, I just leave all these things there intentionally so that if I have labeled them, you will know the difference. But nevertheless, you can see the clearer picture. That's why your place of your analysis should be a clean place where indicator and all of that will not disrupt or obstruct you. You should be able to define the data you are gathering. Now, there's something unique about gold is this. Now, the market you have sold here, and that's why I tell you people, I say, once you sell or you buy, stay with it because you have put your stop loss. So this is your, right? And then you have sold, and then your stop loss, because it's two cluster above here. So 1:2 risk reward. Of course, the advantage me and you have, you know that we will always be targeting our psychological level. But outside that, we always look at the low that brought about that. That means here, this is already 1:2 point something risk reward. Now, you don't need to panic when the market pull back here. You may not be privileged to add more, but if you have not opened all your position, that is when you are adding more. It's still the same thing because you have a gasset. And then all the two, bada, 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 you push back. Don't bother. It's not your job. Leave it. I actually send this signal, and I send the signal down to the other block. It looks impossible. And then the market delivers. I remember vividly. If you go to Telegram, you're going to see it. And then the market delivers successfully beyond your own point. So imagine if you have three put. That's why I always emphasize, instead of one bulky lot size, split them so that you can enter and maximize everything. Now, if you return back here, that's 1:3 point something. It's already big money. How many? 350 pips, and delivered very well. Now, there's something you will not understand, is that the market has come back and tap into what? This is 4 hours order block. This is daily order block. It has not tapped into this, but it tapped into this 4 hours order block. If you go and check our indicator, by this candle, it's already telling us buy on 15 minutes because it has tapped into the 4 hours order block. It's already telling us at the close of this candle. So, okay, this was a bearish candle. So at the close of this candle was your entry because it opened here and went up here and then came down and stopped here. Okay, and your indicator already asked you to buy. At that time, he asking you to buy. He has asked you to buy from here. Please, one thing I'm telling you is that don't always entertain fear. It's one of the things that many of us are battling with now. We need to kill it. If you are going to fail, fail. Don't. But in the process of still saying, am I sure, am I not sure? Many of you will remember that I bought into this now. Now the market move up. There's something you don't see. So here, look at it. This is almost like, this is equal high. Now equal high is another why, where, because equal high is a liquidity area. And what gold did, so for me, I will be targeting the sweep of the equal high here. Look at it, 1, 2. I'll be targeting that point of equal high here. And what did the gold did? Marvelously move up and sweep the liquidity and still give you power of 3. Very simple. Number one, where and why? Oh, Felix, this is where as the context. Why? I have equal high in this my context. Market has swept the liquidity, both the equal high, and this is power of 3. So that is why I am taking my action with precision. Thank you very much, Felix, for that. Okay. Now, can I fail? Yes. So I now go here. Market can manipulate against me. You can see how I say we has to do with gold is buy and selling. You have to understand. If it has to do with gold is buy and selling, then you see another massive delivery. Now, the first target I'll be targeting is this other block that will be mitigated, which become a support. Now, the next is there is an unmitigated other block, which was daily, and the market traveled to the point and deliver yours truly. Now, somebody is getting more clearer now. So here, the market on 15 minutes, you see when it tap into this other block, you see this long candle, when the thing close, when the candle close, your indicator have asked you to buy. If I lie, let me show you. Let's go to the 15 minutes. Look at the thing that was explained to us. At this candle, your indicator already asked you to buy. And remember, the candle open here, do this, and close here, meaning that you are buying from here. So understand that this is not a bullish candle. This is a bearish candle. Your indicator already asked you to buy. Then 2, he asked you to buy here. Then 3, he asked you to sell here. massive one here. He asks you to sell here. You can see those other ones. Yeah, okay, yeah, here is it. I think this is the double top. Look at that double top I was explaining. This is the double top. After he swept it, your indicator already. So you can see that your indicator is working with context and, all right, context and your confluence. That is the factors. Now look at what I just explained. So your indicator is asking you to buy already here. So when you buy here, because this is a bearish candle, at the close of this candle is already telling you to buy. So when he asks you to buy, that means your entry is here. Your stop loss is below here. And then he just remove a bit and then continue to move. Now look at it. Look at this candle here. Your indicator already asked you to buy here. Now when you buy here, your stop loss is here. Now my eye is here because this is a double top and a sweep of liquidity, massive. You already move. Now, returning back to this point was another environment entirely. So you can see those explanations I just did here. This was the double top and all of this. This is purely price action. And the market returned back after sweeping it. It did all of those things I've just explained to you. And the market was struggling. And then you saw when we came here, I talked about something here the market was inducing. And okay, yesterday we're here. And I told us that, say, you see this market, if you remember that yesterday was when I marked something like this. And I told us, I said, this market's supposed to be buying. That, but all this thing here, they are liquidity. That the market may want to sell there. And that was what that sell I gave to us yesterday. When I enter about 3 positions, pam, 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 I told us, you see, now the market after we sold, I think we sold around that point here. The market was struggling there. And all of a sudden, boom, that delivers as much as possible. Now we could see that since that yesterday, that was the low that the market recorded yesterday. And you can see all of these shenanigans he was doing. Now, if you don't understand it to the breaking down like this, I can tell you boldly speaking, you wouldn't have find any entry because you'll be struggling and waiting and all of that. So the same thing occurred today. The market, of course, drifted up. I traded it on the lower time frame and all of that. So we have had this again. This is almost equal high. It swept the liquidity again, return back here. So it's drifting all of this. I've told you that this is a low, and that low now, the market has swept the liquidity. Do you understand? And so that means we're going to be drifting into this, probably return back up eventually, right? And so now the other one that was sold down, Fadan stepped down to 5 minutes. So there are times you don't need to step down to 5 minutes because if you don't understand the market from higher time frame, stay in 5 minutes will confuse you because you wouldn't understand. So this is what I was telling you, Mr. Nat, when he said, this is power of 3. So the power of 3 here was obvious. The power of 3 here was obvious. All right. This is the power of 3. But the challenge is this. This, if you check your indicator now, this must have asked you to sell. Let's go there and check. But you probably wouldn't understand. Let's go to 5 minutes. Okay, so because this one are hiding and there's a liquidity up here that I expect that the markets come and take. You know, you can see the advantage most of us have because you are learning. Now, not everybody, most persons that are only using this indicator, even if they catch it, they can't have edge up to the edge you have. You have edge because you understand power of 3 and you know how to picture it out. You saw it here. Now, even the indicator did not give you sell. You know that this power of 3. I know somebody who is so crazy about power of 3 is Mr. Paul. Even the slightest of it on Doji, he will see it. Right? So, and I say that some power of 3 are just perfect power of 3 setup in equal edge. Some are in kind of change in state of delivery. So you can see this one already has formed. Eventually, even when you are looking at, oh, how am I going to do? The close of the candle is when you enter, not the beginning of the candle. Where did this candle actually close? It closed up here. Now, so you are now struggling. Even when you struggle with this, look at the middle candle. This is still an accumulation. Then this one happened. This is a failed. Now, this is the power of 3. Now, so that means the close of this candle. Where did it close? It closed up here, not down here. So the close of this candle is an entry, and your stop loss, instead of at the high of this candle that form it, you are forming it in this previous high and then selling down. This is going to give you explicit. Even without indicator, you will be able to trade, but indicator will just help you to spot some things that probably you wouldn't see. That's why I always want our chart to be as clean as possible. Now you have this. So here was power of 3. You have sold down. Now, if you don't recognize all of those, why we always say that take 50 pips, 100 pips, and all of that, this trade is likely going to push you out. Look at it. You will now say like this. So at the close, and then, oh, sorry. So chances are there that you are going to just go a little bit higher than this. Now, look at the problem. Imagine if you are not targeting just, imagine if you are not targeting, because here now, if you look at this one, your take profit service should be faster because this is just 18 pips and this is already 2.6 if you are targeting 1:2 risk reward. So, and on your psychological level, so this is about 49 pips. Now, if you are going to target the center one, which is going to be 205, that means here. That is 1:4, almost 1:5. Now, but if care is not taken, if you just leave this thing, the market can come back. This coming back, definitely you may not catch this. Chances are there you will not catch this. Why? You already recognize this point as a potential resistance. The market return back to it. Sweep liquidity. Why Mr. Nat was explaining was when this abracadabra happened. And look at the massive sell. So this massive sell. Now let me show you something. Where the chances that you will have lose this trade if you are following today after selling. Because after selling, you probably will target here. Beautiful trade, you have taken the profit. You will lose this trade. Many of us can see it now because there's a power of 3 here. Even though, because we that understand power of 3, we use it very well, right? So even though your indicator does not give you a signal, upon that, it didn't bring out any signal. But I know myself, haven't seen that because you are scalping, you are certainly going to take this trade. And your stop loss here. So you are going to lose this trade. You are going to lose this trade because you are probably targeting here or back to this point. Now, as the trade is going well, all of a sudden, what happened? And in the losing of this trade, we make you not to see this one. We make you to not to see this one. But because one of the things is that when you lose this trade, you are not bothered. You know why you are not bothered? You are now waiting to see that, oh, what is this market going to do here? It's going to sweep the previous day high low, and which is happening now. But you need to constantly stay in the range, and that's what you are checking here. You need to stay consistently above the range, and then you are now drifting to buy, okay, or sell. There's a market I bought. I have cheated you people, but I did not have time to have shown those guys, but no problem. Okay, so now that is, now you have now seen, when you have this perspective from the bigger picture of you must have an idea where is the market going to. So when you are now scalping inside it, you will know what you are doing per time. You understand? You know what you are doing per time and all of that because you have an idea. This is a very simple thing that we do. Okay, so let me conclude on the currency because there's a trade I entered. Yesterday, there was a trade I entered using Beckonet software. Oh, and so that trade now has returned. It was a fantastic trade, but when I did the analysis, see what happened. I've missed this entry, and I really, really, really wanted to take this entry today, but it's not a problem. Now, if I have not watched that video I did that you have to go on weekly, you have to go and watch it, right? So now, see what happened yesterday. The trade was successful. But for beginner, they are likely going to lose, especially if they are waiting, because they didn't have the idea of where, why, what. Let's quickly do this. And then another one I entered this morning. Now, so, I told you guys about, marking the weekly zone, just like normal thing I said. If you go to that video, you have to go back there and watch it. It's very simple. And then that'll give you a clarity of purpose. Remember that when we say we are marking our zone, it's only on the coin, so you can see a crypto man on the coin or the instrument you always trade. So look at it, for instance, what I did was simple, right? I have to go on what? On I have to go on weekly to check. Okay. So to check key levels. So weekly key levels are crazy and fantastic stuff, right? So you can see this. I've done video on this over and over again. So go and anything I'm doing now is not new. It's just that our attention were not drawn to it most especially. So probably I just want to see some significant points. So here can be one. If I'm going to go more, I don't need to go too much clustered, but I think there's a significant one here. It just to have some multiple touch points. In the here is very significant. Okay, so here too is very significant. Okay, so let me just add one more as we move. So now this is weekly. So I'm going to change it back to the candlestick so that I can see it very, very well, right? Now this is weekly. You can see. So when market get there, you don't struggle. In fact, currency, when you are trading, you don't struggle. You look at it in a higher perspective, a higher time frame, so that you can be in charge. So when we go to daily time frame, so it has marked all the key levels practically. Now, marking my key levels shouldn't stop me not to understand my market structure. So you can see this pure, oh my God. Now, this is how you invest, trading investment. Now, so imagine when the market was struggling here. Now, this was as at June. Somebody is going to be in this market as at June and probably may not bother. Up till now has not bothered. That's about 1,700 pips. You can comfortably put one standard lot, just one. So just one standard lot with 1,700 pips. June to December, 6 months. I'm just trying to be. So if it's 1,700, you just swap, they will collect, multiply by $10. That is $17,000. Oh, yes, that's it. That is $17,000. It's only swap they will collect. So I'm just showing you now. So now, looking at this, because what you only be doing is market structure, break of structure. So now, this is a break of structure, break of structure. I don't want to go down to this point. I want to go to the more recent break of structure. So this is what I did. When I came here, I saw this is a break of structure. So this is a break of structure. So you already know what we do here. So there's no point struggling with ourselves. Now, this is a break of structure. Now, after the break of structure, the market returned back. It didn't come back. So you have two major origin here. Remember? It's a significant area, so you should need to know. Then the major one. So the major one is a confluence with your weekly key level. Do you understand now? So the market went back here. So what happened here is that this is a break of structure, but this is an inducement. So the market actually created like a high again. This can be very complicated sometimes. And now break, but this start more like an inducement. So it broke that. Then you can say this is a low that you expect the market probably to return back to again. But this is like an inducement. So you need to understand. So if that's the case, very simple, right? Okay, fine. The market induced and then broke another one and massively dropped down. So when the signal gave it, I bought in the sense that the market bottom out here and create more like a power of three. But this, you see, this place was another block. So that means the market returning to return to what we call a breaker block. A breaker block is a stumbling block against if the trend is up or if the trend is down. Because it was supposed to be a place where markets should bounce, but market got there and broke it. That become a breaker. And now when it become a breaker and market break below it, it become a resistance against the market. But remember, we have an area of interest here where. So now this is the point. And now I was now teaching in that point. I said, this market, I'm afraid, is going to sell down because it need to come back into this order block. And if it cannot sustain this order block, that means this low will be taken out. Then, man, we are going to be seeing tumbling. The market will change entirely. That means we have a total reset. And that's what I'm even suspecting. Because the market have been buying as long as possible, but you need to now go fundamentally to know what's the economy situation of the representing currency country. Look at it. So that means the total reset that will happen in this market is here. Come on. That is since till 2022. So then that means fundamentally, if I know the economy of that is Euro and then New Zealand, what is happening, then you can now say oppression can happen for this market to continue to press down. And that's going to be a long sell over the year. Imagine 2022 had been continuous buying, Euro buying power against SND, New Zealand. So now, but nevertheless, in between that, you can still make a lot of money. So that means tentatively, you're waiting, you actually want this market to come down to this point. So as I took it, when I saw that trade was dilly-dallying, I closed it because I knew that it's singing another song. Now, this is my challenge here now. Look at my challenge. This is already a breaker block. Have you seen it now? In clear term on 4 hours. Now, if you are going to go on 4 hours, this is a sweep of liquidity. These are swept liquidity. And then we have this low that created that sweep. So now this is sweep, and then we have a low that created that. So ordinarily, this market is supposed to return back, and then we have a massive. So if you are going to sell well, so you see a fair value gap here. So even if the market is able to cross this breaker block that become useless, that means I need to now watch out for this fair value gap. So this fair value gap, because now this has not mitigated. So this fair value gap can draft it down. Maybe that's what is going to have good mitigation before a new buy. So these are narrative that when you are now looking into your market, you can always just be calm instead of noise. And I'm just telling you that I bought into a market this morning and I didn't show to you because I was busy. Look at it. This is Euro JPY. Though it was risky because I don't know what DXY was doing. Many of you who are following on DXY when I was explaining it. Now, so DXY. So we have just normal break and then double top. So the double top, I told you the market was now drifting down. And drifting down here now, so except this now break above this, and now we can say continue up. If not, this thing is still doing, it can just juggle and then another leg down. And that's why I was a bit careful. But that's what it is now most of the time. Now, that was where I have to come to this chairman and I enter a position. Look at it. This is a breakout structure, this is a breakout structure, this is a breakout structure, even though it's too unnoticed. So since we have a breakout structure, I know many of you know why now I did what I did. I have to look at another block. And now the market traveled to it, doing what it was doing. But I have to go to 4 hours. Now, on 4 hours, this is currency. You don't even over disturb yourself on currency. If you're going to lose, you lose. So you don't disturb yourself so much like the way you can structure gold because of the volume and the movement. And so it first came into the other block and tap into it. Now, the best overlook that you will have used to enter the market was to have come to 1 hour, and you will have seen very clear. Now, our usual power of 3 will have played out here. Can you see that? And now, one of the lovely things is that as it had played out there, that's our power of 3 that played out there. So now that means you're looking at taking the market here. That should be yesterday. Okay, no, on Monday. And then the stop loss below the wick. Because this guy is wide. You're having about 24 pips as stop loss. So 1:2 risk reward, the loan is here. It's very fast. And then if you are going to go, because you probably will be targeting this high here. Now targeting that, of course, you are trailing your stop loss. This is 1:5, ladies and gentlemen. That's about 131 pips. And you're using one standard. Now, because one standard, let's quickly calculate it. This is the thing. One standard, this is 24 pips. Now, why do I say you may be using one standard? So if your account is 50,000, so that means your daily drawdown is 2,005, and then you are risking, let's say, 5% of it. And we have 24 pips, so let's just call it 30 to give tolerance. Okay, 0.4 for conservative trading. Now, if you're trading with $200,000 or less than $100,000, and now that should be what? So that should be 5,000 daily drawdown. You are using 5% of it and all of that. That's almost one standard. Now, for people who are risk averse, they can take so much risk. If they are using 10% of it, that's about 1.6 pips standard. Now, if it's $200,000, so depending on what is the account size of it, maybe $6,000 or is $10,000 because if it's like traded mastery or what's it called, funded next and all of that, 5%. Or even the Atlas if it's not instant funding, for instance. So 5% of it, 30 pips, 1.66. And so if you go back there and then you are drafting into this in 1.66 standard. All right, so that's a 1.5 and 0.5 divided by 0.5 times 3 that you have taken and all of that. So 1:1 risk reward, of course, we have taken that first. So targeting like 50 pips because 24, 25 or 30 pips and all that, targeting 50 pips. So 50 pips multiplied by $5. That's $250 already. And then you have the other one moving. Now, so the market actually now drifted down here, right? And then we saw the market move down, have another touch. This is another touch. This will have formed an entry. And of course, stop loss. So most of the time now, for safety reason, stop loss may be below here. But when this one comes, the stop loss can be below here. I think I can't remember where I just entered and put the stop loss. So, but why I say it's a little bit risky is that this guy is below a resistance. So you actually need to break it because this breakup structure, if you use it on 1 hour, then you can see that you really need to break above this point and stay level-headed. After breaking at this point, stay level-headed and break this, then you can be fine. So that means that entry I took on that is risky, but it can be promising because I'm sure it's already in profit. Let me even check it quickly. Okay, it's just a very small size. I think okay, it's one small size I put in, but I put a long this thing. That's just about $15 or so, something like that. Come in. Okay, so that's one we need to know and learn, and so that imply so all of those things. The knowledge is very important and all of that. So gold, we should be looking for maybe by 6 a.m. or if all things being equal, since we have a sweep of liquidity, it should be buying. Now, but if you now go to your chart on your this thing, you will have gotten a buy. Remember, I said this one definitely will have given the buy on 5 minutes. So let's even look at it on 15 minutes. It didn't give because it's too much and long. So, but on 5 minutes, it has given, and look at it. So if it has given, then maybe you take small position when you're entering because the candle closes here and when it was given, that will have been here. And stop loss is a bit bogus. This is 60 pips. So probably we'll be targeting here until eventually. So now, and then that will have given you times two. Then the market again return and give you another proper power of three. I mean, I hope we can see that. So we had given series of it. Look at another one here in this same place, and then look at another one here in this same place. So like for anyone who got this right, then that person must have been targeting to take profit here because invariably when the market actually give this your power of three closes, because it's at your psychological level, and that's why you are actually reacting to it. Of course, the first take profit is the half of it, and then next will be here, and then unless when you have more, now you have more, because you expect that if the market actually closes inside well, so by the time we come 6 a.m. and all of that, the market will have given this. So it's because of this analysis we're doing. If not, you will have found an entry. Like I told you, the way it was doing, there was nothing more than to go to sweep liquidity. And that's exactly what happened. And that, so imagine you didn't have an idea of marking your previous day high, low, and all of that. You wouldn't know what the market is actually reacting to. Meanwhile, it was reacting to external liquidity to sweep it. And that he has done. If you go to 30 minutes, you see that in the far 15 minutes, you understand? So you now say, okay, then that's close. And if you're going to 5 minutes, probably you can find an entry. Because these are choppy that, somebody who's looking for another thing or this other consolidation confirmation may not get it because the market will have done what it wants to do before you even wake up. All right, so I just want to believe that this is a very detailed top-down review and then to consolidate our decision so that we don't just assume. I think that if you do like this, you're supposed to do no. Where, why, and then when. You have to be precise, and then your precision is very important about all of this. You lose well. I mean, as in lose with reasons, okay, oh, maybe this won't happen and all of that. Okay, fine. But that delay in not reacting is because we don't set all of those templates as appropriate as possible. that have a lot of effect on our decision. All right, so let's hope that if this guy get here, should pull back. If not, so that we can now find another entry. So if you pull back. But I know that those of us who have set up our structure properly and all of that. So you see these 5 minutes. So this is a break of structure. So if you get here, pull back, or get here, retest here, that will now be forming your own entry. So sometimes when you give you all of those change of character, it's normal because that's internal structure, the way the market was moving. So it's a normal thing that you can see. But because you have an idea and understanding of how the market is formed, so you won't be under pressure. Can be fine.